Preparing for a finance manager at CEZ interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about your experience and why you are interested in becoming a finance manager at CEZ. My background combines financial reporting, budgeting, cash flow management, and commercial analysis, with increasing responsibility for guiding teams and challenging business decisions. CEZ interests me because energy finance connects operational performance with regulation, commodity markets, major investment programs, and long-term sustainability. I would bring disciplined control, clear communication, and practical business partnering. My objective would be to produce accurate numbers quickly, explain the drivers behind them, and help management allocate capital while protecting liquidity and compliance. While answering, connect your controllership, planning, analysis, and leadership experience to CEZ's energy sector complexity, regulated environment, capital intensity, operational scale, and need for reliable decision support. Question 2. How would you build an annual budget for a large energy company such as CEZ? I would begin with CEZ's strategic priorities and translate them into operational drivers: generation volumes, realized prices, fuel costs, availability, headcount, maintenance, CapEx, and financing. I would align assumptions with operational leaders, challenge them against historical performance and market data, then build base, upside, and downside cases. After approval, I would assign clear owners, establish monthly variance reviews, and refresh the forecast when material assumptions change rather than treating the budget as a static document. Make sure to cover strategic objectives, bottom-up operating plans, production and price assumptions, headcount, maintenance, capital expenditure, financing, scenario analysis, ownership, challenge sessions, and monthly monitoring against approved targets. Question 3. Describe how you would investigate a significant budget variance in operating costs. I would first confirm that the variance is real by checking postings, accruals, exchange rates, and budget phasing. Then I would separate price, volume, mix, timing, and one-off effects. For example, higher maintenance expense may reflect genuine outage work, accelerated spending, or weak accrual discipline. I would meet the operational owner, quantify the recurring impact, agree corrective actions, and update the forecast. My explanation to management would focus on cause, consequence, action, and remaining risk. In your answer, discuss materiality, initial data validation, price-volume mix analysis, timing effects, one-off items, operational root causes, accountable owners, corrective actions, and transparent escalation to senior management. Question 4. How do you prepare a reliable rolling forecast when electricity prices and demand are volatile? A reliable rolling forecast should be driver-based rather than simply extrapolating prior months. I would update production, availability, demand, realized power prices, fuel, emissions, foreign exchange, hedging results, and operating costs using current market information. I would maintain base, downside, and upside cases with sensitivities showing earnings and cash effects. Monthly reviews would focus on changes in assumptions and forecast error. I would communicate a range and confidence level, not create false certainty in a volatile market. Be sure to mention driver-based modeling, market assumptions, production volumes, hedging impacts, sensitivities, forecast frequency, probability-weighted scenarios, independent challenge, and communication of uncertainty rather than false precision. Question 5. What would you include in a management dashboard for CEZ's finance leadership? I would design the dashboard around decisions, not data volume. Financial measures would include revenue, EBITDA, operating cash flow, free cash flow, liquidity, leverage, working capital, CapEx, and forecast variance. Operational measures might include generation volumes, plant availability, outage status, realized prices, fuel costs, and emissions intensity. Each KPI would show actual, budget, prior year, forecast, trend, owner, and commentary. I would keep the first page executive-friendly, with drill-down detail available for investigation. While answering, prioritize actionable KPIs across EBITDA, cash flow, liquidity, leverage, CapEx, working capital, generation, availability, safety, emissions, forecast accuracy, and deviations from strategic or regulatory commitments. Question 6. How would you evaluate a major power generation or renewable energy investment? I would assess the project through an integrated operating and financial model. Key inputs would include construction cost, schedule, capacity factor, availability, degradation, power price assumptions, operating expenses, taxes, financing, and decommissioning obligations. I would calculate NPV, IRR, payback, and cash flow timing, then stress test delays, cost overruns, lower prices, and weaker production. Finally, I would compare returns with CEZ's hurdle rate and strategic priorities, ensuring the recommendation reflects risk-adjusted value rather than headline IRR alone. Make sure to cover discounted cash flow, NPV, IRR, payback, construction risk, operating assumptions, power prices, capacity factors, degradation, financing, taxes, regulatory risks, sensitivities, and strategic fit. Question 7. Explain how you would manage working capital in an energy business. I would manage working capital by linking balances to operational drivers and settlement calendars. For receivables, I would monitor aging, credit exposure, collections, and disputed invoices. For payables, I would preserve supplier relationships while using agreed terms consistently. Inventory requires attention to fuel, spare parts, and criticality, because excessive stock ties up cash but shortages can disrupt generation. I would maintain a rolling cash forecast, review exceptions weekly, and measure cash conversion without creating avoidable operational or counterparty risk. In your answer, discuss receivables, payables, inventory, collateral, settlement timing, supplier terms, customer credit, seasonal demand, cash forecasting, process controls, and balancing liquidity improvement with operational resilience. Question 8. What are the main financial risks facing an energy company, and how would you monitor them? The key risks include electricity, fuel, carbon, foreign exchange, interest rates, counterparty credit, liquidity, regulation, operational outages, and project execution. I would monitor exposures through defined limits, sensitivity analysis, stress tests, maturity profiles, and regular reporting to Treasury, risk, and management committees. Hedging decisions should follow approved policy, with clear separation between execution, valuation, and oversight. Finance should explain both accounting effects and economic exposure, because a hedge can reduce cash risk while creating reporting volatility. Be sure to mention power, fuel, carbon, foreign exchange, interest rates, credit, liquidity, regulatory, operational, cyber, and project risks, together with limits, stress testing, hedging governance, and escalation procedures. Question 9. How would you ensure accurate and timely month-end closing across multiple CEZ entities? I would establish a close calendar with clear owners, cutoffs, review points, and escalation deadlines across every entity. Standard checklists would cover bank reconciliations, accruals, provisions, fixed assets, payroll, tax, intercompany balances, and unusual transactions. I would use materiality thresholds to focus review effort, automate recurring reconciliations where possible, and maintain an issue log for late or recurring problems. After each close, I would analyze bottlenecks and improve the process without weakening control quality. Focus on a documented close calendar, entity responsibilities, standardized reconciliations, accruals, intercompany matching, review controls, materiality thresholds, automation, issue logs, and post-close improvements. Question 10. Which international financial reporting standards areas require particular attention in CEZ's financial reporting? I would pay particular attention to revenue contracts under International Financial Reporting Standards 15, leases under International Financial Reporting Standards 16, impairment of generation assets under IAS 36, provisions for decommissioning and environmental obligations under IAS 37, and financial instruments under International Financial Reporting Standards 9. Energy companies also require careful consolidation, foreign currency translation, asset component accounting, and disclosure of significant judgments. My approach would combine technical accounting assessment with documented evidence, early auditor discussion, and controls ensuring operational data reaches finance accurately. Mention International Financial Reporting Standards 15 Revenue, International Financial Reporting Standards 16 Leases, IAS 36 Impairment, IAS 37 Provisions, IAS 19 Benefits, International Financial Reporting Standards 9 Financial Instruments, Consolidation, decommissioning obligations, and disclosures relevant to energy assets. Question 11. How would you assess whether a power plant asset requires an impairment review? I would first identify indicators such as sustained power price declines, regulatory changes, plant outages, higher costs, reduced dispatch, or an adverse market outlook. I would define the appropriate cash-generating unit and compare its carrying amount with recoverable amount, using value in use or fair value less costs of disposal. The model would reflect realistic production, prices, margins, capex, and discount rates. I would stress test key assumptions, document judgments, and involve auditors early when headroom is limited. While answering, explain impairment indicators, cash-generating units, value in use, fair value less costs of disposal, commodity assumptions, discount rates, useful lives, sensitivities, and documentation of judgments. Question 12. What controls would you implement to protect the integrity of financial reporting? I would build controls around the main risks rather than adding unnecessary bureaucracy. That means segregation of duties, role-based system access, approval limits, controlled master data, reconciliations, journal entry review, and documented evidence. I would pay special attention to manual entries, estimates, intercompany transactions, and changes to bank or supplier details. Monthly exception reporting and periodic control testing would identify weaknesses early. Effective controls should be proportionate, understandable, and embedded in daily processes, not performed only before an audit. In your answer, cover segregation of duties, access rights, approval matrices, reconciliations, journal controls, master data governance, exception reporting, evidence retention, audit trails, and periodic control testing. Question 13. How do you lead finance professionals with different levels of experience? I start with clear responsibilities, measurable expectations, and an understanding of each person's strengths and development needs. Experienced colleagues receive ownership and space to challenge decisions. Less experienced team members receive structured coaching, review points, and opportunities to present their work. I use regular one-to-ones, constructive feedback, and documented development goals. I also cross-train the team so critical processes are not dependent on one person. My standard is high, but I want people to ask questions early. Be sure to mention role clarity, coaching, delegation, technical development, feedback, performance expectations, succession planning, psychological safety, and adapting your leadership style to individual capability. Question 14. Tell me about a time you disagreed with an operational manager over financial assumptions. In one forecast cycle, an operations manager assumed a rapid production recovery after a planned outage, while my analysis showed commissioning risks and slower ramp-up. I avoided presenting the issue as a personal disagreement. Instead, I reviewed historical restart data with the team, modeled several recovery paths, and quantified the cash and earnings effect. We adopted a phased forecast with explicit milestones and contingency actions. The result was a more credible plan, and the relationship improved because the challenge was evidence-based. Make sure to use a specific situation, explain the differing perspectives, show how you validated data and assumptions, demonstrate respectful challenge, and finish with the agreed decision and measurable outcome. Question 15. How would you respond if CEZ faced a sharp decline in power prices and operating cash flow? My first priority would be visibility. Update the cash forecast and downside scenarios using lower prices, weaker volumes, and possible counterparty effects. I would assess liquidity, covenant headroom, hedging positions, working capital, and committed capex. Management could then prioritize essential maintenance and strategic projects, defer lower return spending, tighten collections, and review discretionary costs. I would communicate actions transparently to lenders, the board, and operating leaders. Cost reduction must protect safety, reliability, and the company's long-term earning capacity. Focus on immediate liquidity protection, updated scenarios, covenant monitoring, hedging review, discretionary cost control, capex prioritization, working capital actions, stakeholder communication, and avoiding decisions that damage long-term asset reliability. Question 16. Which systems and tools have you used to improve finance efficiency? I use Excel for flexible modeling, an ERP for controlled transaction processing, and dashboard tools such as Power BI for repeatable management reporting. In a previous role, I mapped the close process, removed duplicate manual files, standardized account reconciliations, and automated variance reporting. Close time fell by 2 days and review quality improved because explanations were linked to source data. I would apply the same principle at CEZ. Automate repetitive work, preserve approval controls, and ensure users trust the outputs. Discuss ERP experience, advanced Excel, Power BI or equivalent reporting, automation, data governance, process mapping, user adoption, control preservation, and quantifiable improvements in speed, accuracy, or transparency. Question 17. How would you manage a conflict between group finance and a CEZ business unit finance team? I would begin by understanding both teams' objectives and separating factual disagreement from interpretation. We would compare the transaction details with group policy, applicable accounting standards, materiality, and reporting deadlines. If judgment remained, I would document the alternatives, financial impact, and recommended treatment, then use the agreed escalation route rather than allowing debate to delay reporting. I would communicate the final decision respectfully and capture the lesson in guidance or process documentation so the same conflict does not recur. In your answer, emphasize listening, shared facts, policy interpretation, materiality, consistency, deadlines, escalation routes, relationship preservation, and a documented resolution that supports both local accountability and group reporting. Question 18. Describe a situation where you identified an accounting or reporting error before it became material. During a balance sheet review, I noticed that a recurring accrual was unchanged despite a major contract volume shift. I traced the calculation to an outdated assumption, quantified the current misstatement, and checked prior periods for trend and materiality. We corrected the entry before reporting, informed the controller, and updated the model with a monthly source data validation. I also added an exception report for balances that remain unchanged beyond a defined threshold. The experience reinforced that analytical review complements formal controls. Be sure to explain the warning sign, investigation, root cause, correction, control enhancement, communication approach, and how you quantified both the immediate and potential future impact. Question 19. What would your priorities be during your first 90 days at CEZ? During the first month, I would meet finance, operations, treasury, risk, tax, and audit stakeholders while learning CEZ's assets, reporting structure, systems, and decision calendar. In the second month, I would assess the close, forecast, controls, KPI definitions, team capacity, and major risks. By the third month, I would present a prioritized roadmap with quick wins, such as clearer variance ownership or automated reporting, alongside longer-term improvements in planning, data quality, and business partnering. Mention stakeholder mapping, business and asset understanding, close and forecast assessment, risk and control review, team capability, quick wins, data quality, and a practical roadmap aligned with management priorities. Question 20. Why should CEZ choose you for this finance manager role? CEZ should choose me because I combine strong financial discipline with the ability to translate numbers into operating decisions. I can lead accurate reporting, challenge forecasts constructively, manage deadlines, and develop a team without losing sight of control quality. I am comfortable working with uncertainty and explaining complex issues to non-finance stakeholders. In an energy business, that means connecting market movements, asset performance, cash flow, risk, and investment choices. I would bring ownership, integrity, and a practical improvement mindset. In your answer, summarize technical finance capability, commercial judgment, leadership, integrity, communication, continuous improvement, resilience under pressure, and specific value you would bring to an energy sector organization. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.